What is the future of banking if we can do our services via big tech companies like Apple, and if we hold accounts directly with central banks? Against this backdrop, the Commission proposed its digital finance package. This package is dealing with many different aspects of our new digital finance world. Looking at the bigger picture, the DFP aims to accelerate cross-border operations and help to support financial market integration in the banking and capital markets union. And a closer banking and capital markets union will further strengthen Europe's economic and monetary union. This is the view of most policymakers, practitioners, and academics alike, and was also very often discussed here at the EBI.
Progressive digitalization has generated a new landscape for the financial sector. Europe has become a digital finance powerhouse. In the meantime, fintech is the sector that has attracted the most venture capital investment in the EU in the past 5 years. For the first time, the MiCA proposal will establish a common European regulatory framework to provide legal clarity on crypto assets that currently fall outside the scope of EU financial services regulation. For crypto assets that are already covered by existing EU financial legislation, the Commission has proposed an amendment to MiFID II. This is to make clear that traditional financial instruments can also be issued in a tokenized form on a distributed ledger. Crypto assets can present many opportunities that can contribute to our policy objectives. For instance, some crypto assets, utility tokens, can contribute to our objective of building a capital markets union by allowing for cheaper, less burdensome, and more inclusive ways of financing for startups and SMEs. The crypto asset market as such is still modest in size and does not pose a threat to financial stability. We know that crypto assets also present consumer protection and market integrity related issues, including the risk of market manipulation. However, a subset of crypto assets, the so-called stablecoins, could trigger challenges to financial stability, monetary policy transmission, or monetary sovereignty. These issues have been taken into account. We're also examining how our financial regulation and supervision must adjust in order to ensure that all risks are properly covered along the same activity, same risks, same rules principle. Technology companies need to face the same prudential rules and supervision as traditional banks, insurance, or investment companies when they start providing financial services.
Digitalization is a very important component of running, steering, and managing a bank. With COVID, things have even accelerated, and we have also seen a tremendous change in client behavior during this moment, and that's why for us it is of utmost importance to have a reliable framework we can work with. The commitment for the principle of same business, same risk, same rules is expressly welcomed from our end. For us, it is important to have a level playing field with the big global tech companies and fintech, given that these are our real competitors going forward. Therefore, as an example, data should be shared across all sectors with the consent of the consumers to make sure that we can share their data with whom and whomever they want. We are in the strong belief that a currency belongs into the hand of the central banks and not to individual and private companies. That's why we do not actively invest nor advise on cryptocurrencies as a bank. What we do support is the plan to introduce the digital euro.
And we know that MiCA is trying to sort of carve out its own dimension by not impairing into the areas of capital markets legislation and payment services legislation as it is. And this is perfectly reasonable, but we still need to understand better how this regulation would actually fit into the current architecture of EU financial markets legislation. And the most striking probably example of what I'm trying to say is MiFID, that of truly decentralized assets such as Bitcoin. It is a little bit unclear whether these would fall within the scope of the regulation. I think it is important that we address this issue right at the beginning. The turning point of MiCAR is that it would provide a European passport for these crypto assets, and that's, you know, it's clear cut, and also MiCAR is a regulation, so it's directly applicable, and for once we shouldn't have too many divergences among member states, and I think that those are the two key elements of MiCAR: European passport plus directly applicable regulation. That's why taxonomy is so important, because we have to ensure that what is considered as a MiCAR token in one country is accepted as such in the host member state, and Europe would be the unique pan-global jurisdiction, 27 countries with a common regime for crypto assets, and this would be unique. So if we achieve that, it would give us effectively a competitive advantage. That fine-tuning on interpretation and taxonomy is the key to achieving the success that MiCAR is most likely to achieve.
Besides the fact that the clients wants to see and wants to perceive this convenient approach, they want to choose the way how they interact with us. So it might be that we interact with the client on the way what we are currently doing via a telepresence and or via the mobile app and or via the online banking or whatever the way is. For us and what for the client is important, that all these different channels he or she is using interact seamlessly with each other.